What is going on, everybody? It's your boy, Mr. Banks, coming at you live with another trade recap. Today, we'll be going over AMD and going over market structure, which is very important as a new trader. You have to understand when something is bullish or when something is bearish and understand the structure of the market. This is one of the very first things you should understand when it comes to trading, because then you'll know what is the highest probability of direction you will be in. Hit that retweet and like button. Comment any questions you have after the video, and I'll be sure to get back to you. But let's get started into the trade recap. Before we do that, I have to give a big shout out to the team. Killed Mara, killed AMD. Congratulations to everybody today. Had a massive day. But let's get started into the trade recap now. So going into market structure, one of the biggest things that I see newer traders do is get so zoomed in on like a 1 minute time frame, right? Get so zoomed in on a 1 minute time frame, you forget about the whole picture, right? You forget about the whole picture. So let's just do this 1 minute here. We can even go 5 minutes. Let's just go to the 5 minute chart. And they're here on the daily. They see this at the open. Oh no, we're breaking below. Let's get super short. But that's not what we did. We took A and D calls. And why was that, right? Why was that? Because we are not zoomed in just on a smaller time frame to begin with. We are zoomed out, right? Before we even took this trade, the trade plan, the direction that we're looking is going to be to the upside. And why is that? Market structure. Well, let's take a look here. As we know, everybody's least favorite name for quite a while now, almost about a year now. Used to be really good. Everyone has been hating it for about a little over a year now. And we've been heading into a major downtrend. So absolutely, this is has not been fun to trade. Not a good name, but what happened here? We know we're in a downtrend. And for those that don't know, as far as what is a bullish trend or what is a bearish trend, it's going to be two important things. In a bearish trend, you will have lower highs and lower lows, lower highs and lower lows. In a bullish trend, you will have higher highs and higher lows. Now, what do I mean by that? Bearish trend, bullish trend. We add that. So when we're in a bearish trend, right, we put in lower low, put in a lower high from a higher. Here's the high, lower low, lower high, lower low, lower high, lower low, lower high, lower low, right? This is going to show you that we're in a bearish trend. And again, how do we see this? We zoom out. Now we can find this on a 1 minute time frame. If you are a scalper or you have the experience and that's the type of trading that you would like to do, by all means, do what works for you. But we are looking at the bigger time frames because we should always be having a top down approach. We should always be knowing what is the macro structure, what is going on in the bigger time frames, because that's going to show you the developing bigger move, right? Makes sense. Lower time frames show you a smaller move on a smaller time frame, while a larger time frame shows you a bigger move on a higher time frame. So we're at the weekly. And sometimes you don't even have to go to the weekly, but I'm showing you at the weekly because this was pretty major because we've had a very long downtrend. What is happening? Well, we broke out of this downtrend and we're creating a higher high, higher low, right? The structure of this was bearish. Where did we break out of? What was a major structure? Let's zoom back here because this rectangle is very important. This area right here, a big demand supply flip. So this is the area that took us into all-time highs. So if this was our liftoff area of demand where buyers are at, right? Demand equals buyers, that took us into all-time highs. Wouldn't you think that this area or this zone would be a very important flip zone? Absolutely. So we take a look here. We got a little bear flag. We push lower, reject, lower. And now we broke above this structure again, right? Reject down to the most recent lows, reject again down to the most recent lows, and then we broke out of this structure. So we not only broke out of this downtrend, creating a higher high and a higher low, but we also broke out and held this major area of a demand supply flip, right? Major area. So we have a couple things going for us as far as the actual market structure. Number one, breaking the bearish downtrend, right? And we're on the weekly chart. So this is a very big trend that we are breaking out of. Number two, the market structure is very big supply demand flip zone, took us to highs. We're right here. We break below, break below. Now we broke out of. So not only we're breaking the trend, but we are holding a major area, reclaiming it and holding it. What do you think this is? Now we're shifting from a bearish market structure to a bullish market structure. Now, let's go to the daily time frame because this is where it is pretty important. What do you see here? Well, if you can't see it already, this to me looks like a flag, right? It looks like a nice flag. Very simple. Let's go bullish flag stocks, right? So if you guys don't know, a bear flag or a bull flag, especially on a higher time frame, has a very high probability for it to have continuation and play out. So we know we have a bull flag on the daily. We know on the weekly chart is also breaking structure, not only breaking the downtrend, but reclaiming a major structure on the demand supply flip zone. Great, we have that. Now we're looking on the daily. The daily is flagging out, which we know is a bullish continuation pattern. So we broke market structure, reclaimed bullish market structure, and now we have a bullish flag on the daily time frame. So if we have all of these confluences giving us bullish tendencies, then we know that the highest probability is going to be continuation now to the upside. Continuation now to the upside. So just like we're taking a bull flag or a bear flag on like a 5-minute chart for a day trade, this is giving us a pretty high confluence. Why? Because we are on the higher time frames. The higher time frames are giving us all of these confluences to give us a very high probability that we are now going to continue to the upside. So now that we have all of that clear, what am I going to look at? How do I take an entry on this trade? One of the things to look at is, okay, what are some major levels within that daily structure, within the daily chart? Well, we know we have a hammer candle, also a bullish signal, coming down into our gap up here around 107, 108. And then let's just take a look here. So this is important. Why is this important? Because bodies are important because it shows you an open and a close. The wicks of the body, right? These are the wicks. This is the body. The wicks are important as well. And especially in this instance, because we opened here, right? We opened here red. If you guys don't know, the body at the top is going to be the open, and the close is going to be wherever it closes to the downside. Just like a green candle, the open price is going to be the bottom of the body, and the closing price is going to be at the top of the body. So what is this telling me here? We have everything I just talked about, but what is this? You can say pin bar, hammer candle. This is telling me sellers try to take us down, and buyers within the same day, right? These are daily candles, within the same day brought us all the way back up. Brought us all the way back up. So that's showing me that these sellers are now losing control. They're losing momentum. The buyers are here. They're ready to step up to the plate and take us higher. So again, with all these confluences here, we have this as well. Uh, on this daily candle today, right? What do we come down to? Retested, right? Sellers, we took us down, right? We opened, sellers took us down. We retested the bottom of that body, right? Where buyers took us back up and closed, held and started pushing back up, creating another, call it a hammer candle, breaking into a flag breakout, right? We're breaking out bullish flag. So, where am I taking an entry? How do we take an entry today? Well, let's go down to the smaller time frames now, right? Do you guys already see how I'm doing a top down approach to taking this trade, right? I'm not just coming in blindly. I'm not, oh, this looks kind of bullish. Let me just, no, we're going a top down approach. You have to be doing this when you are trading. If you want to take this serious and you want to give yourself the best outcome possible, you need to start doing a top down approach. So great. What happened today? Let's go down to the 5-minute chart because this was the open. Where do we bounce? Where do we hold? Well, we know that this is the candle that we showed earlier. Kind of filled that gap fill. But let's go down to the 5-minute here. Let's do the 10-minute. Get a little bit more. Where do we hold? Did we not hold 113? And where did we bounce from? About it's called 112.40. Well, if we take a look left, is this not a heavy support resistance flip? Right? So we're rejecting, heading to lows. We pop back up. We come back and retest this structure, right? Retest this structure. So now this should give you an indication that what I'm teaching you and what happens in trading is that every idea that you learn works from the highest of the high time frame down to the lowest of the time frame, right? Every idea, every strategy, every concept can be used and applied to every single time frame. I know it's going to be mind-blowing for some of you, but that is what trading is. Every concept can work on every single time frame. So great. I mean, right here you can see we bounced right above this support. Let's take a look back. Support, especially right here, May 13th took us into those highs, the top of the flag, right? So we know that this is a heavy support here. Where did we come down and open? That heavy support. We retested it. Boom. We reclaimed that 113, which is that high that took us into the most recent lows, reclaiming it, and now we go long. So does everybody get that from starting on the higher time frame, the weekly, repeat it very, very quickly? Bullish, bearish, right? We're understanding our trends. Bearish is lower highs, lower lows. Bullish is higher highs, higher lows. We're breaking out of this downtrend, reclaiming a bullish market structure, right? That took us in the highs. We're reclaiming this structure. Got two things going for us. We go down to the daily. We're in a bull flag, a bullish continuation pattern. So we have another confluence onto it. And then we can even kind of zoom in on this bull flag and see this bullish pin bar, bullish hammer. Why is it? Well, it tells us a story that the sellers try to take us down, pushed right back up. Very exhausted sellers. Buyers are now in control, looking for that reversal. We retested the low of that body. And I will say it doesn't have to retest this exactly. We could have moved down a little bit lower, but as long as we really reclaimed and pushed higher than this 111.65, the high of this, then we're going to, the bulls are taking over. Why? This is the last time the sellers were in control. So buyers reclaim this level here. Buyers are now in control. So we have the continuation pattern. We have the hold into demand. And then going down to the lower time frames, looking that we're holding a very big support resistance level. So from supply and demand market structure flip to a trend breakout to support resistance hold to everything I just mentioned, went into taking this trade right here. And we got over 50%. And we're still looking for some continuation here. So holding a couple runners. But see how it's not It's not just waking up and deciding I'm going to throw my money at this and hopefully it goes. It looks like it's going to go up. No. And again, this is something, it seems like it takes a lot of time, but this is something you could do within 5 minutes the more practice you get used to it. And trust me, in the beginning, I used to hate doing stuff like this. I used to, it take a long time. I just wanted to make money. But you can't just want to make money. You have to want to learn how to actually trade the right way. So, when you create a trade plan, you should always be doing this approach. It's called the top down approach. If you guys enjoyed this, my name is Mr. Banks. I'm here to make you a profitable trader. If you have any questions, you have any comments, drop them below and I'll get back to you. I'll leave it on this, guys. Believe in yourself. I believe in you. You can do this. Thank God. Love you guys. Let's have a good week.